Yeah, this is one thing that I never really liked when I saw this pattern. When it talks about the 88 to an 88, but it can also have a 38. What that looks like is this, basically. And the difference can be is that this can be an 88,
Yes, sirree, Bob.
but it can also be a 38.
It's one of my favorite patterns. Used to be a rising or falling wedge, but that changed.
Well, this is
Technically, that is a series or a couple of wedges, yeah.
hmm, close. Doing now. Like what we're doing now isn't exactly the same, but if I did draw the pattern over top of it, is what we do have right now. At a 2.3, an 88 to a 61. Like that's the thing. It's like just because people don't see this on their list of harmonic patterns that it's allowed to make, they'll assume that this is not one because it went to the 61 instead of the 38 or the 88. I'm like, oh my goodness. I mean, it's like just so it's just like so cookie cutter to me. I'm just like so scared to think about. It just shows there's no relationship with the market. No understanding of what it's supposed to do. You're just trying to paste over. This is the pattern. It's supposed to do this. Every time I see pattern, I do this. Market doesn't like that. And you'll find out that that's how people can program computers to do that. Computers search every time you see this pattern and make this trade every time you see these ramifications, and it'll make those same ramifications and deliberately give different results. And 2023 is a meat grinder of people learning the hard way that that's the case. And I love that people think it's like, when I get the messages and stuff, and it's like, oh, I want to learn your strategy and stuff like that. It's like, oh yeah, just come in here and sit here for an hour, and it's like consume the information and bloop, and you're done. You know the strategy now. You're gonna be rich. You're gonna be rich. Go nuts with that. I'm like, that's just like, try doing that with any other professional. Go to a doctor's office and do that. But like they can talk and tell you as much as they can in that hour as well. You can use every bit of information. You can have an open book test still. Wouldn't have you operate on me. Same thing with a car, same thing with a plane, same thing with anything important. Same thing with anything dangerous. You don't want to, but everybody has their full autonomy and they take the accountability that they have at their job and bring it over to this. And it's typically not the right thing. So very interesting to me. This is a pattern that we saw yesterday where, we could see I'm making a little bit of a video on it. We saw it a couple times earlier, but this one right here, just taking a look. Like I see the same attempt, except it's obstructed by the horde of people that have no idea what they're doing. And yeah, sure, we get a little bit of gyrations in the middle area. It's like they're trying to catch a hot potato with all these people trading. And they know that if they leave the range, all of them are going to be there. And basically, if they wait a bit, the people literally leave, and you can count on it, just like just like the institutions do. Every single day, they make a move, and they wait for for the individuals to respond. And like clockwork, and like anticipated, they do. Just like the farmer knows his flock. So there's that point. We did meet the same ramifications as the previous day. What we did in between these two basically was a consolidation that formed the POC. Not one place did we go sideways for longer than we did in between those two spikes. So are we debating whether or not it's a consolidation? Well, let's talk about the tip of the triangle, for instance, and how it respected that by going very, very sideways. Also, we could see that in this sideways movement itself here, you could see somewhat of a similar, cleaner approach. The day started out really by going sideways, up, and then big down. You know that the biggest portion of the day was a downwards move, and anybody that thought that that was more down was incorrect, basically. And a lot of people would have been shorting after what happened yesterday. They saw that they're, going long didn't work, so, or sorry, going short didn't work, so they're gonna try something else perhaps, and effectively that didn't work today. Everything that was given on the report was taken back, so anybody that was prepared for the report to benefit them in a positive way, a bullish way, was effectively everything that was given was taken back. And what was taken back, now we've essentially come back to the 61 and we're testing it from the upper side, which is funny to me because yesterday when we did that, it was all about testing the 188-200 like this. You see how we tested that 188-200? We ran into it like that. We tested it, tested it, tested it, dumped off of it, and then it pulled right back through just a step on top of it like that, right? And then we can see that the bigger picture, 188-200, not that one, this one, was up here. Remember what we did to this old 188-200? We punched it and then stepped on top of it, right? Well, let's take a look at this red bar because that's the other bigger 188-200. And when we came into it, It felt it originally by hitting it, and then basically we grinded that other side, stepped on top of it, just like we did the previous one, and then ran beyond it to respond to the 261 and so on above. And I can't help but notice that today the way that we treated this 61 was the same way, by running into it and then grinding it and then stepping on top of it. Deja vu. And this being played out from the 161 down to the 100, the red zone got its response back to the middle of the range. Nothing but wicks and spikes past the high of the node. Anything that was bought up past the blue line and inevitably returned back to it. Here, I'll be right back. But sorry, we do have to actually watch out for the red zone to have more wicks and spikes. This is a little bit of a triangle right here too. So that triangle coming to an end with wicks and spikes that lead back to it, we do have to watch out for that. The red zone is capable of leading back to the green zone. as well. So there is a risk of that. So any trades taken from the spikes or wicks in the green zone, you have to essentially ensure that you have enough profit taken off to withstand a move back to the green zone if need be. And any stops that are dragged inside of the range are subject to being stopped out in the event that the range is to be used. And I mean, we could go ahead and put a VWAP on here as well. We can see we're grinding that top end. But yeah, I'll be right back. So we can see that the first move out of the triangle came back to it. And effectively, we use the same line that we did yesterday to respond negatively. Effectively, this was the line that we had before the close that had the negative response. You know what I mean? Could we put the same spike out the bottom of the triangle? Could certainly try, so.
Link here to the nav.
Yeah, coming from a W.
Yeah.
It's from the 188, almost back to the 100. Yeah, so tomorrow's report, everybody will basically show up for it, and I think that whatever control the people harness out of the report, because everybody, it's like a snowball effect when people start to hear that other people are benefiting or fearful out of a move, then everybody starts to conform to that idea and they want to be part of it. And essentially, it's only a matter of time before the people, start to go after each other, and they lose that ability to unanimously trade in one direction. And effectively, the first initial impact of the report can have that shock value where everyone trades in the same direction because of the event, and they basically think it's going to affect them in however way, and uh, it's not long before the institutions regain their control again. It's just how much damage will be done before they get that control back, or will they retain it through the report? If enough people flock together and all start buying in one direction or selling in one direction, we can we can see how that could have an adverse effect on the people that have the control right now. So that's why they're in the business of hedging. They don't just sell and fold under the pressure of their own profit. They don't give up the control. They don't give up their entry. They don't give up the next dividend. And I'm sure they release reports as well that that insinuate that they have taken profit or that they have done things. I don't believe it as far as I can throw it. It doesn't matter if it's the legal reports that they have to release every year. I don't believe it. I believe it for 80% of the hedge funds though. The ones that matter, the one or two that matters in the world, three maybe. Oh, secret.
Hey, I'm about to check what today was the consumer price index report, right?
Yeah, yeah.
That was a core inflation rate, yeah. Inflation rate month on month, year over year. Basically, just did what it forecasted to the point, really.
But they released that report at I think it was like 8:30.
Yep.
Yeah, I don't know if any of you guys are looking at the SP 500. The one I'm looking at is it just got rolled over and upgraded to the March contract. So now it's like MESH, I think 24.
Yep. Yep. Should have rolled it over.
But well, right around 8:30 when they released that report, I think that's when there was a big, pretty decent movement on the market.
Yeah. Yeah. The report definitely had a movement, but it's basically returned right back to where it moved from, uh, and stagnating there. Tomorrow the big report's actually coming out. This is not really the big report. Tomorrow's report is be a lot more impactful.
Yeah, around 2 o'clock there, the interest rate decision.
Hmm. I do admire how they've kept the 61 relatively close to the B points down there too, so it's not off the table. Basically, it's in line with the green zone there too. So the wicks and spikes that we've had at the high, they do remind me of the wick and spike that we had last at the green zone, and we could see that.
Do the Fed interest rates uh, would those affect the mortgage?
They definitely can, and like they can affect everything from businesses to like inflation, everything. They're trying to basically curb inflation by doing this. I'm not sure exactly what they're going to do tomorrow, but I know it's going to have an impact on the market, and that's the main thing. The economic value to me personally is pretty minimal. It's very interesting. What most people consider important, I disregard typically. It's something else that drives me to make make actions, and the allure of the report and everybody's opinion on it and what it does for the economy. It really is irrelevant to me. Honestly, it's kind of interesting. I focus on just exactly how I can manage to buy a trade and sell it for a profit, and that's all that matters to me at the end of the day. And it doesn't seem to be the case for a lot of the people that trade based off of those reports. They're buying and hoping that the report will affect them the way that they think it will, but they can't say for sure. So they're gambling, and I'm like, well, I don't write the reports. I don't read the reports. I don't even listen to them. And basically, what they do is they increase the amount of technical movements that there are. And when I can see that we look back in retrospect on a chart, we can see exactly why it moved the way that it did from a technical standpoint, and we can see it just moved even more than it typically would, and it allows us to basically get more out of our time. As long as you can see what's clear when we make the report, just like many of the earnings, we get like a lot of them have been dead, but the ones that have moved exactly as they should, and can't remember a single one that didn't. And yeah, I should make a video on every single one of the earnings ones that I've done. I'm absolutely proud of them. They're typically pretty heavy moves and they respond to pretty decent levels. And from every single fluctuation in the candlestick that it does from the moment that it releases earnings, it's very clear. And I look forward to the next major event tomorrow. Right now, we kind of have a head and shoulders forming here, which is interesting because earlier in the day we looked at an inverse head and shoulders down here, and basically that reminded me of one that we had yesterday, and it ended up playing out up to the red zone. The red zone, is doing its job at being a red zone. Not many people will have it because it's never been a range before, so we have that put in there.
I think they call what we're in right now. It's called a bull flag.
Yeah, I would. You could say that about what just happened potentially, like this pullback right here.
What chart are you looking at?
Oh, the chart that I'm looking at is Nasdaq. The
Nasdaq. Hold on one sec. Let me pull that up.
Yeah, that's it's kind of similar to what the spy's been doing today, except it's just got a little bit more movement to it. When it does go sideways, it's a little bit different.
Okay, so it's Nasdaq. Is it like what is okay, so it's a so you're looking at Nasdaq, right? So is it a future or is it like I guess option?
So this is just the index. Basically, right now we're um, looking at the index, and whatever you choose to trade, whether it be options or futures or stocks, you can get exposure to the index in whichever way. Mainly futures is the way to go for this index, in my opinion, though. But you can trade it with anything.
What price does it show on your chart? I just want to make sure we're looking at the same chart because the one I'm looking at it's like 60. Let me check. Yeah, it's like 16.5, like right around there.
Yeah, so the index basically can be provided by different providers, and basically it's not something that has a price value. This is something that basically it's 100 stocks that are represented by point value, and essentially 100 different stocks mashed into one chart that allow us to uh, have an idea of exactly what they're all doing together, and that number can be represented by this many points. And different providers, they might have a slightly different representation of what that is, but they're all generally similar. Different derivatives too can be priced differently.
What's yours at right now?
16,284, but then I can go up, and it's 16. Like I have about 7 different Nasdaq charts that I can go through. Just like there could be same thing with the SPY. Like I can find the US 100 according to these people, right? Or sorry, the US 500 according to these people right here. The SPY is 4627, but um, but according to these people, it's 46.28, and like these ones, it's 46.27, 46.26 on this one. So they're all slightly different providers. It depends on which one, but they're all going to be ballpark the same, and all of the candlesticks should be identical. So personally, if I could remove the price, I would. Like, I don't use the price at all. Like, I don't think it's actually. It'll never tell you where it's going to go. It'll never tell you, when to make a trade, when to exit a trade. I never consider it. hmm And it's like whenever you trade derivatives that are like futures contracts or options or an ETF, it's almost certainly never going to be the actual price of the index. Like it'll have some sort of deviation, some sort of slight difference.
No, I know
To
what you mean.
mhm.
I just got rolled over from the what is it, the December contract. It expires like I think on this Friday, but they rolled me over like Monday night or Sunday night, and now it's March, and it went from 46.20, like the S&P,
Mhm.
it went from 46, 46.2, now it's up at 46.87.
Yep.
It went up like 50 or 60 points, and it messed up all my. I had all my little lines and all that stuff drawn on it, but I was able to get most of it back.
Hmm. Nice.
Because all my lines stayed 620 area, and then the whole chart moved up 50 points, and so I had to just like redraw a couple lines, and then I forget what happened, but I was able to get it back.
Yeah, I like to do the analysis on a continuous chart so that whenever the rollover happens, it doesn't take away any an analysis or morph it for that matter. You can see we're leaving this triangle now though as well, increasing volatility. The return back to the triangle, it's not as likely to be honest as the ones that we've been seeing before. Yeah, or not as large essentially of a profit.
What triangle are you talking about?
This one right here on my stream.
That's your stream.
hmm
So that's the you said that's the Nasdaq.
hmm
Um, what time frame?
1 minute.
Could you go to the 15 minute real quick?
Yeah, sure.
Yeah, right there. You see where your mouse is, right? Like it almost looks like a snake coiling up, right?
Hmm.
You know what I
Yeah,
mean? Or
in a way, yeah. I see. Yeah, I like out of this pattern here. I've seen it like basically form a head and shoulders into an inverse head and shoulders out of a move like this, basically, where the left shoulder forms and then a head on both sides. We can come and form
no,
a right shoulder here as well.
I don't understand. The way I'm looking at that is you draw a triangle and you form the shape of a trumpet. Okay.
Yeah. Expanding wedge. Yeah, like a megaphone. Yeah.
But to me, what it says is, and then I'd also like to point out, if you pull up the MACD on that 15-minute chart, you'll see that. I don't know what MACD is. Oh, now I see it. So you see from like a little bit over to the left, the MACD was trending downwards, like right where you have that red and gold dotted line
Okay.
on the chart. Right, if you look there and then you follow the MACD to the down,
Mhm.
but the price kept going up the whole day.
Yep.
That threw me off because I hate it. Like every couple of days or every so often, you get a period of time where MACD just decides not to do its job.
Yep. Exactly.
Today was one of those days.
Mhm. Yep.
I was so scared today because I knew that was gonna mess me up, but I was, I'm taking a break for a day or two. I gotta wait until that MACD gets back into like adjustment. But
Yep. Sure. It definitely yeah, like it was clear yesterday that it was and I'm making a video on it, and it's funny, I did go over that in the video as well. The sideways movements that we had were projected to make downwards momentum, and it still wasn't supposed. It was supposed to not go down. It was supposed to continue going up, and it was despite the negative momentum. Like the most of the day yesterday had bearish momentum, and it still went up. Quite interesting. Like there was a constant bearish divergence on the consolidation. I wouldn't be surprised if there's one on this one here too. Like the entire time that consolidation was going sideways, this was going down and it still went up. Same thing's happening with this one here. So it's like it doesn't matter, and is what I see. But I don't use that. I use this 10% of the time, not even maybe 5% of the time.
well, I tried Divergence a long time ago, and I it barely ever worked. But the MACD
Well, you just
crossover
have to
was
you just have to know when to put it, when to use it. Like it definitely will work again, and it will work flawlessly, and it will be great for for people part of it. It's just right now it's like people think it will be too like that easy. You could program a robot to find those calculations. It's making sure they're all wrong.
well. I use it with I look for support and resistance, and then also what do they call a MACD crossover. If I see that, then I hold it for just a longer period of time because those with those crossovers, a lot of times on the 15-minute chart,
Hmm.
you can get a good hour or two, and it goes up like 10 points. The most I got so far was like 20. I got a 20 point or like a 23 point.
Yeah,
Um,
we got to be a little careful with going and just because of the one indication. But usually we like to find confluence, like a bunch of different reasons to get in for something that
but
makes sense.
it was like a 20 point trade, but it was on the S&P, the the SP the SP 500, like the one of the future contracts.
Yeah.
But usually I just go for like 10, 10 points. If I get 10 points, I'm happy. But 15 better, a little bit better, and then I gotta see how the week plays out.
Yeah.
It's not even I got on the SP this morning. I got 11, 12. I got 14 points on the SP 500, but
Right on.
it was over the course. It was over the course of two trades. Uh,
Nice.
yeah, I actually I was using a stop loss, and I put the trade in at like 7:30 this morning, like East Coast time, and then
Mm-hmm. Mm-hmm. Right on. Yep. Right on. So I can see we've popped out of the bottom of the triangle here. Essentially, we've spiked out of the top as much as we've spiked out of the bottom. Yeah, sure. Take a look. Yeah, it is. So the 50% retracement looks like it's lining up with the view app, and I'm going to put some new fibs on here. The 61's still in the same spot that it was before. That's fine. The 38% at the view app. That's where the volume profile starts to change. Yeah. Yeah. Yeah, it just made it to the other side of the gap. Made a couple of these B points in here too. It's grabbing the
The
first
1
one.
minute hit the RSI on the bottom on the green line.
Oh, that's interesting. I feel like that's early.
Yeah,
I feel like it's
yeah, I
not
agree.
It's not down. Like it's above the VWAP too, so I'm kind of interested in that.
Which
See
is
what it.
above the confluences, with the volume
Mhm.
and the touching the green line on the bottom of 1 minute.
Yeah. Of course, any trades that have been taken in the aspiration of getting to the green zone should be made profitable by this point. There's a lot in the way. Like that VWAP is at the low of the node there.
Overnight view up? Yeah, I get the same thing.
Basically, I'm going to mark this level right here. The gold dash level. This is the 61. Put a new line on the top. That is the trend. Wonder if we'll see any kind of parallel nature from the underside, because we've only ever touched the underside of this consolidation really once, and that angle could be seen again in the future. Could be an appropriate spot to have it. No, not quite. What's interesting about that line is it's actually a blue line, but see if it has any interest with it. It's another confluence at the VWAP, because it's a reason for it to have the same angle as the other side of the range. And it's not something that we haven't really seen before as well. It's something we totally have used previous consolidations. Curious about this one even. Yeah, getting on top of the red zone by the end of it all is something I'm interested in as well, so be careful with any hedges that have been taken. For whatever we do,
Never quite got down to the 188, but maybe hit a trend line there.
yeah, it's seems reluctant to move at all.
Yeah. It's faster down here. That could be the third drive. Down.
Hmm.
Just a thought.
Yeah. Yeah, it could be. Like on a very short-term scale, or?
Yeah.
Hmm.
Well,
Yeah.
if you bring that blue line up, it looks like a wedge.
Yeah, I do see that, but it's just I'm a little indifferent about it right now. I think it's going to continuously pull people's legs in this area. VWAP's kind of drawing it in, and I think as many reasons as it has to kind of stall out there. It'll have there's this is the area where most of the people have been trading, and they try to overlap it so frequently. All these people from the overnight session been overlapped so many times that they'll be lucky to have a position still. So that's the VWAP basically.
Do you ever use the Fibonacci?
Yeah, that's basically what these are. Use it every day.
Yeah, it's right about to hit. It's hitting the. You got it set up the same way I did, like that. Yeah, and it's hit. On mine, it's like point. The either the 3 or the point 6. Yeah, on mine it just hit the point 6. But let me just double check again. I got mine upside down. Let me just change it. Yeah, so it looks like it's going through the point 3 percent.
Yep.
I guess that's That's good for the
Well, I have it responding exactly to the blue line I put in there. Also the low of the node. Any pop off at this level could be construed as a right shoulder as well. We do have very similar setup to what we did yesterday. One move away from the right shoulder. With absolute precision, it's tested the blue line. Any wicks and spikes that ever form out of the bottom of that blue line are subject to coming back to it. Because it is the middle of the range, you can have a little bit of a snap around the VWAP. Is something that can stagnate it a little bit, but wicks and spikes can form around it. Ultimately, patience with it is key. Now we do have a new trend here, and until it breaks, we are in a downtrend, and it is one of the next trends to break. Regardless of the blue or not, the yellow one is in danger of breaking. Now we do have a couple B points down below. One of them's in the green zone. Of the 61 shortly. Close to it. Okay then. Random playlist, sorry about that. So close to the 188, basically still responding to that blue line. With absolute precision. And it's not because everybody's got it either. And it's not because of, you know, a 43 or something like that. It's basically interested in this line. This line right here is one of my favorite lines for this moment. Red yellow line, I make it. The trend is breaking. The retest must be allowed.
Very close to that 261 from key point around 1130. Yeah, your top green key point there. Straight the line.
Yeah, I guess I did the one to the left. Yeah, 261 is there. Still, it's like no fib can give me enough reason, but something like this, something that I demanded would be the case, like I literally invented this trend line. And it's like, what are we seeing so many people do the same thing? I mean, like I dare people to try to do that again. It's not gonna work. Like, it's like literally, I'm like, That's how the market is. It was a time for it. That was the time for it. I understood it at that time, and that's the way that it is. And it's a matter of understanding, not a matter of, oh, this is my strategy, like the individual would think. I'm like, no, 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 no. So tough. Not always a repeatable process. Be cookie cutter chopped over and over again, but the real money printer is to understand what it's going to do next because you see the value in it, not because it's a pattern that you can recall from a previous time. Like I don't remember a previous time that I've done that, it's like not recently. There's a time for it now though. And it was the only thing that I said, the only variable that I said was important. Market chose to respect it. What does that mean? Is that the right way to trade? Well, for that moment, undeniably, there's no better way to trade, interestingly enough, than to consider the angle of that line. And right now, is a point where we run out of volume. So ignition candle, thinking about retest, be on the table. At the end of the day, I do see the break of the top red yellow line being the final result of this. Does everybody that was part of the exciting trend break get a retracement that takes us back to the VWAP? Most of the progress overlapped. No? Okay, well, if the people are in the way, well, we may need to do something like that. And I can see that might be an option, so will I obstruct it from happening? Not a chance. It's quite interesting, really. But I love when the market makes very definitive particulars that I know is not part of anybody's strategy and it chooses to use them perfectly. It just goes to show how little impact the average person truly has. Because I don't know that if that's part of anybody's strategy. I'm the only person in the world that does it, as far as I know. So I wasn't taught it. I saw the need for it, so I implemented it, thought for myself, and did it. But takes discretion to be able to think for yourself and understanding environments, understanding like being able to be hurt so bad and push through is another major thing because a lot of people would quit if they went through what I went through to get to where I am. So that's an interesting point as well. And it's like, what does it take to have an understanding? Well, I mean, just like when you've been playing a sport for years and stuff like that, you've scraped your knees a bunch of times. How often do you scrape them now? I mean, like, it's very, very unlikely that you're still falling off a bike and stuff. You know what I mean? I'm just like, we shouldn't be. Because you get the process, and it's like, it doesn't matter what path you travel down, you'll be able to navigate it because you know how to ride a bike. That's the way it is. Some routes are rockier than others. You might have to travel a little slower in order to stay safer, but as long as you know that, well, you're fine. As long as you know you don't have to go 100 miles per hour down a mountain, then you're fine. But if you don't have that information and you understand the gist of how a bike works and you think that it's acceptable to go down a mountain at 100 miles per hour, you might get hurt. You're probably actually going to, and I don't care how much of a bike rider you are, you're probably still going to fall off. Or how do you know that the tire just doesn't melt into the ground as soon as you hit something too heavy? And it's like, that can happen. It's definitely happened to somebody. And I'm like, hopefully it doesn't happen to anybody, but it's like they weren't aware of how much pressure they could put on the handlebars. They weren't aware of how much of the, it's like there's so many different things, variables. And it's like, well, to not understand those variables is a risk. And to think about the risk is important, in the business. That's what my first broker told me. They were in the business of risk management. and they're here to sell products. They looked at it as products, not investments, because when you go in there, it's very interesting because it's very personalized and selfish to think of that you're selling products. Like you know how you feel when you sell a product to somebody, they're done. You're not responsible for any of that. It's that the product is sold, you know? Yeah. Yeah, I don't know. I don't know. But I didn't feel very good about that when I felt that I was just being sold products and I was like, this is more than that to me. I'm not just buying, you know, flowers at the store. But that's the way that they look at it as. It's almost like they they high five each other and say suckers as I'm leaving or something like that. It's like, geez, that's tough. And it's like what's crazy is I don't even think that they're made like that. Like she didn't come up with that. She was taught that culture, you know? And I'm like there's nothing wrong with that. That's just her job. And I'm like that's fine. But I think that the whole culture should change. I think it's a bad thing to keep spreading and teaching people. This is the B point. We can see it's working out really well. The blue line was the pinnacle of reversal. Undeniably, the only thing that stood out as something that was different in the environment, and it was directly related to which line? The red yellow line, not the B points. So we'd stop at the B points. And we're just pausing at the B points. To some, it'll look like stopping, but I think it's just a pause. A negative response to the downtrend that we're ultimately going to break. And if not, then how not? Are we going to retain this trend for, well, forever sounds stupid, but even for a prolonged period of time? Because no trend, is gonna like it's naive to assume that it'll last forever. Trends are made to be broken, or we'd still be in the last one. Think about it. We'd still be in the one that never broke at some point when it didn't break, right? But except it did. That's the messed up part. It did break. Or else we wouldn't be in this trend. And I'm like, what? Then just start. If you're still struggling with that one, and I'm like, well, look at the past 5,000 trends. The past 5,000 trends, and how far back would you have to go to really get to 5,000? I don't actually think you'd have to go very far. If you think about every trend that literally has broken to get us to this point, how many trends have broken today? Not just the big ones, but every single small one. I don't put every single trend in there, but I put the ones that I value the most in there, pretty much. The ones that I'm looking at. I don't want to divert attention away from things that, aren't relevant. And something that's not impacting the current price or is difficult or is kind of not really going to impact the future. It's not something that I won't remove it all the time instantly like that, but sometimes I leave them on there. They're not meant to distort your ability to look it over at this part of the chart. know? That's like when people look at a map, they try to find out where they are, where they're going, right? Or you try to just consume every detail of that map. Do you see or do you try and use the map? Like when you want to you reference it to figure out where you are, but instead when people look at my chart and they've never seen technical analysis before, they think that they have to be looking at the red bar, the green bar at the same time. They have to be looking at every trend line, comprehending all of it. Everything's moving at once and like it's like they're looking into a freaking kaleidoscope or something like that. And I'm like, that's what they perceive it as. And I mean, what's interesting is I like on Wall Street, you could spin it off to be something that they never looked at it for the rest of their life. You know how easy it would be for me to convince people to never look at it again? You know? Could really, really make it easy. And and it's convenient for Wall Street if nobody looks at it like this, because they don't provide resistance at the levels that make sense. And otherwise, the institutions don't have to buy them out because they don't understand what a resistance level looks like. They're interested in 16,000 for crying out loud. That's not even a like, I mean, what kind of indication is 16,000? Just because it's 16,000, it's an indication? And what about 16,000 means up or down? Oh, is it the direction that we've met it or something? Like, I don't understand. And how are you supposed to get consistent results off of that? So every single time that we've met 16,000, we're supposed to get the same kind of response? And we're going to do that for 15,000, 14,000, 13,000, 20,000? Well, good luck with that. And I mean, I mean, I would be worried if I had like, you know, a a bunch of people relying on me, and that was what they had to rely on, was that 16,000 was going to work for me every single time the way that I thought it was. And I'm like, ay, no, 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 no. You couldn't do that. Like, that would be tough. It would be tough because it would be a gamble, huge gamble. Because you don't really know what 16,000 is going to do. Because there's nothing about the number itself that actually, like, it basically makes people feel something inside, and they go off of that feeling. 16,000. Oh, saw that on the bus the other day or something. It's like, I don't know what it does, but you want to know why it wasn't even individuals that I saw round numbers impact. It was the analysts that guide the individuals, which is atrocious. And I'm like, well, wouldn't doubt it if they were hired by the top hedge funds to release that kind of information because it's terrible. And as long as they put them in a suit or something like that, people are like, oh, this guy, eh? Interesting. Better consider 16,000, sell half my portfolio. I'm like, geez, that's tough. And it's like when somebody's put in a position where they don't know why they've profited, if you tell them something that presents a risk, or if you put some news out there that influences fear, I mean, people will take that profit. People will fold under the position. It's like, and I bet you they've come down to it now to actually understand what kind of news will influence people a certain way, and they can count on the fact that a certain percentage of the people will respond in a particular way once they've released a particular news article. I think that should be illegal, but I don't think that I don't. It's crazy that a hedge fund can own all the monopolies in an industry, all the competition, and then all of the media around it. And it reminds me, yeah, no, it's crazy. It just doesn't feel right to me. So basically it. A negative response to the red yellow line, something that we've seen many times before. And we notice that it comes down to the particular node where in this case we did have a POC or a heavy volume node here. It wasn't necessarily the POC. But I am inclined actually to putting a VWAP in here as well, because you can see that out of all the volume that we've had since we've been associated with this range, it's been very inclined on actually, centralizing for this VWAP here, and I don't think we're spending too much more time here, to be honest. But it's just nice to have that little bit of a perspective. Kind of feels like a smaller version of what was going on with this bigger picture leading into a big consolidation that increased in volatility just to amount to spending most of the time back in the middle. I mean, like, well, geez. It's interesting because over the course of the past few months, we've seen that the imbalance has been something that's worthy of centralizing for. We've centralized for the imbalance many times. And, this otherwise contains all of the volume in a rather, in a rather, what's the word? Decisive area. Like it's a very like clean area. Like there's no debate that high right there. There's a cliff of volume, like a significant drop off in volume, and it's not as apparent on the bottom. But I tell you one thing: we've never even used the green zone before, and it's intriguing that I didn't draw this line in here. I didn't make it a triangle like I did this one because I didn't see it as the same pattern, even though everyone else could have drawn that triangle on there. Sorry, I'll actually draw the triangle so you can see that people could have drawn that triangle here. I don't think it's like that though. I think that the way that I see it is completely different. The value of the blue line was to directly get to the red yellow line. The negative response to the trend that we're ultimately going to break, remember, that's what just happened right there. That's the one. And that's the way that we see it in the future too. And like, what's interesting about this is that the result of this triangle does not have to be anything similar to what we've done here. Like this movement here, I'm trying to think of the probability of us getting this exact same movement. What do you think? You know what? Actually, let me think about this in a different way. So it's true that this is a way that we go down, right? When we're going down, we go down like that, you could say. And when we went down before, we went down like that. And when we went down before, I'm like, okay, a little bit differently, but is it not true that it used the same width, same kind of confine, same kind of confinement area, sorry? And I'm like, okay, maybe we can see that, maybe, you know. And then I'm like, okay, how much did we move before we moved into that range, and did we move that much after? It's debatable that the range was separated by a similar movement. And it's also debatable that that movement was presented on the other side of the last consolidation, but it it's clear that it likes to make this move on both sides of this distance consolidation. And would it be the case that that would be the same amount of movement again? Well, it would be the same thing, so it would be. And I'm like, okay, well, if we're positioned from a bottom and we have two counter trend pullbacks separated by three upwards moves, that's five waves. One, two, three, four, and five. Which is interesting too, because you know how similar a head and shoulders is to a five wave move as well? Like it is just a different construction of the same thing. Now you want to know what's interesting is by the fifth it ends, you know, three drives, always three on the highs, makes five waves ultimately. Of course, everything that we're familiar with, like this, typical five wave move. And of course, how much that can be made into an equal, symmetrical pattern that represents an S wave in the middle. Sorry. So, yeah. Um, we kind of have that going on right now, except it's a little funky looking. It's not like, our typical five wave move. It's not pretty looking, should I say. That's what I mean. It's not proportionate. That's what I mean. It's not but you know what it is doing?
Almost like we're on the third wave.
Well, I mean, that's an idea for sure. Well, after it responded negatively to the red yellow line that it was supposed to break ultimately, it broke it ultimately, and we returned back to the POC and the tip of the triangle. Ironically, that triangle was never tested from the underside, and this is what I call paying the price for that. Now, we do have a trend, and it gives me heavy deja vu to what we did at this point yesterday. Just like this. Like, what is this right here? Where we're chopping, 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 spike down, and then it's like definitive trend line. Look at how it broke that. Like how it broke that line. Like when it broke it, it was over. Obviously for the, you know, time being, but that was the biggest pullback that it managed to do since it really started. I mean, and of course there was this one, but that was like the only other one. Yeah. Yeah, the upper VWAP band on the short term is also here too, so that's a weird one. Oh, but hey, with this we do have a range that's like that, right? Okay. And then we did make this movement here, and we're here now.
Be forming just the shoulder here for an inverse. Like we did earlier, only a smaller version.
Yep, yep. Yeah, it's really weird if I look back at how it ended up playing out with the inverse head and shoulders. Well, like the larger left shoulder, and then we had that head, and then it had like or you could say that this was the left shoulder and this was the head, but basically the confines are that it's the low, the lower low, and the higher low. That's the pattern basically has to have a low and a lower low and then a higher low. And effectively this could be the first low here, this could be the lower low, and this could be the higher low. But when I saw what happened here, it's kind of interesting that it started out with this high, higher, high, and then this pattern right here failed into a head, like it failed the head and shoulders. And then it's like, well, like everybody that didn't see that one, and then they took this one and it failed as well. Where to now, it's come back to these people. Almost like it had a triangle here and it came back to the tip of it, having not finished the retest. And then we did that again where we had a triangle here and then we came back to it because we did not do the retest. It's kind of interesting to look at it like that. But the head and shoulders that all failed in here, it's weird because it was like a left shoulder, a head, and a right shoulder, but the right shoulder had two or three head and shoulders in there that all failed in the name of the bigger one being able to produce this movement again. Like if I just took the distance from the one side to the out of the top, basically trying to formulate that same kind of spike, and the distance had between wider, but okay. After all, the purpose of it was to take the entire move from the consolidation, make a move out of it that doubled the consolidation or more, and then take the entire move back. And then took the consolidation, doubled the move or more, and then took the entire move back. How is it not the same thing? Totally the same thing. I mean, it's not exactly, but it's enough for me to understand that the purpose of it, it had the same result. And through the time that it spent there, it did do that. Hold on a second. When I just did that and I draw this like this, how is it any different? We've made a move now that's otherwise been appropriate for the shoulder size, and it right now is separating a spike that has a left shoulder, a head, and a spike, just like this one had a left shoulder, a head, and a right shoulder. So could this be just like a really sloppy inverse Head and Shoulders to Head and Shoulders, and I'll take this over here. Basically, this is exactly what we're working with. Something that we see all the time. And what I come to realize is this is one way for it to do this. And it may not be clear that it's doing this, but one thing I recognize about this move is the 8 sequence 1, 2, 3, 4, 5, 6, 7, 8. And it crosses this point, whoops, crosses this point 1, 2, 3, 4, 5, 6, 7, 8 times. And I'm like, well, it goes into a consolidation where the wicks and spikes all return back to the medium point, and the whole thing's a triangle. You want to know what's great about it? Is it ends. And when it ends, you can expect something else. And what's interesting about what else you can expect is if it's in a channel like this and it comes from somewhere, maybe it might want to do that. It all depends. Now, I'll tell you one thing. This and this are inverted. When I explained this one, I did it upside down just so, I feel like it's better that way. I don't want to show you one direction all the time. This is the direction it's going, and if this one's upside down and it goes up, which way is this one going to go? Well, if it is to work, it would go down, but I actually have reason to believe we're going to be on top of the red zone. So, assuming that it's going to continue to have the same impact is a little rough. A hedge trade from the red zone, I think, is in danger. And I mean, like, what a spike out of the top of the range, eh? Like, we barely spiked out of the top. And look at what we were capable of at the report and what we did after the report. And now this, and now that that is our spike, is it not true that from the spike we've always managed to get to the other side of the range? And from the spike we've always managed to get to the other side of the range. Now we come back to the same side of the range, having made a crappy spike. I mean, like, wow, things have changed. Because it's nothing like that or that. And the cause of this was to bring it to the other side of the range. The cause of that was to bring it to the other side of the range. And the next time that we see that, we'll probably be done in the range. So it probably will give the exact opposite to what it did before. And not stop running and reverse, but probably squeeze people more. Like, what if we get more of this move out of the other side? Could we? Here? I might be asking a bit much, but what about here? That could be an interesting point. I tell you one thing, making things even has been a theme of the day. This has been the first time that we have not made equality out of both sides of the range. Now, I just looked at something and I was like, well, what if this is a W? Screwed that up. Terrible, right? But that W was played out. So, as terrible as it seems, why did it seemingly hit the target and that's it? The B point doesn't look normal, but I mean, things can change, and I find it kind of appropriate. turns, Bragan. Now, is it not true that we've always forgotten to retest the tip of the triangle as we've left it? Now, could we be interested in changing the way that we triangulate and test the triangles? And I mean, undeniably now, returning back to the tip to a triangle that's even bigger than the past three.
8.2, when it spiked there.
Yeah, the short term one.
Yep.
Yeah, that's acceptable for sure. I wouldn't drag any stops above it. Because looks like that node down there would be in line with the retest. Ultimately, though, like I say, the red zone on top is, I think, gonna get hit. And I'm gonna actually change this. This is the old 188-200. I'm gonna make that a purple area. It's not nothing red about it really. It's neutral really, if you think about it, and that's what I use as color. I can even down a tad. It's just a good reminder that that's where we were, and that B point to that 188-200 is still untested. So looks like we're lunging for that node now after all. So that's not bad.
I wonder if we're just going to be triangulating here.
Yeah, I mean, centralization for the end of the day could be on the table. Got plenty of time. I think what they're trying to do is make little jabs off of the red zone, make people think that it's going to dump. They want people to short it so that they can put their stops on the red zone. And that means that the institutions that are buying to the top of the red zone, once they start to trigger people's stops, people can push for the advancement out of the range, and the institutions don't have to actually put money in while it's pushing through the highs. And it's that way they don't get dinged for market manipulation. They're stopping everyone out. Not like they're pushing the market up on positions that they've acquired. So I can see that this is already a play. Like I didn't have to be taught that that's a good play. I already know it's a play because they would be stupid not to do it, right? So at the end of the day, I think it should be illegal. It probably is somewhere, but not nobody. If nobody knows that they're doing anything, like that, then they don't know to catch them. And it's like, what else are they? But I don't trust them because I see what they do. I see the result, and very, very intriguing. And when you can see the result, you start to understand exactly why they have the need to do these things. And when they make it part of their plan to go after the general information of the public, it's like they literally open YouTube and try and find out what people are looking at and then literally make it fail. Very strange, because how else do they provide liquidity for their positions? How else do they make their money? They don't just print it.
Yes, hit that short-term viewpoint.
Yeah, just after it came back to test the tip of the triangle, it came back to test this node now, and points are all hit. again, the triangulation can be found, but I think that it's getting less and less.
Still in a triangle though.
Yeah, yeah, like it can be expanded almost.
Yep, I get something like that.
But part of me thinks that, it is kind of similar to the S wave that happens after we're done the triangulation. Like it's doing its wicks and spikes to finish this area. And like the main thing that I'm interested in are the fact that we've got this like edge here and here. And I'd like to see us get through that edge to test it from above. And if we could put this spike on the other side of it, that would be really nice. The other side of this consolidation would be a move that could come back to right back to where we are, but that's okay. Depends on how it forms. I think that getting on top of the blue line is a ticket back to it as well. It's almost like it wants to get into wicks and spikes mode. Another test of the POC. I think we want to put some wicks and spikes on top of it. That's what I'm seeing here.
Yeah, I just moved the trend line from the top and it's just got resistance there right now. So I sort of form that triangle.
Mm-hmm. Yeah, this is still good to go as well. Yeah, from putting them all the way back at the highs. I'm gonna leave this trend in there. Could actually start bonding to it, grinding it. Interesting that I didn't place that trend line at the bottom, but instead I anticipated that that would be the trend line. Somebody decided that's the way it should be, and I knew that. Kind of interesting. In this case, wicks and spikes sit outside of the triangle. Use this triangle. We're done this triangle in minutes. The change of the hour. Yesterday there was an increase in volatility at this time, not so much today. But it's coming shortly. Increase in volatility. Out the top of the triangle. Don't drag any.
Said it was coming.
And no stops that to be dragged up into this. Well, especially not at that to the view app. The purple view app line is subject to getting tested right now. You have to be aware of that level. And it's like it could be used as a platform to try and get us on top of the blue. Kind of like that. Now we're just responding to them. It's okay that it feels the first time it runs, but ultimately you go through. Testing it from above multiple times is okay as well. It's like for every fluctuation that it does make, there is something that justifies the fluctuation. Nothing is like out of order. Like they're working the machine perfectly. Through the blue. Now watch for the yellow to lead back to the blue.
It's down to the 161 right now. Spiking there.
Yeah, a little underdeveloped. I think we're going to see a little bit more out of it ultimately. That's the retest of the triangle. Basically, it means that anybody that tried to chase out of the top of the triangle was basically swatted right back down, and the market overlapped them, making them very uncomfortable, or realizing their trade into a loss, or coming back to stop their trade out. If they drag their stop up into a profit at any time, they're left without a position and left without an opportunity to buy back in. And this is the reality of so many other triangles of even today, and they don't learn. They seem to still fall. It's like there's new people falling for the same thing over and over again. Or else triangles would act differently, but this seems to work right now, and as so long as people are obstructing its ability to do what it's doing right now, it'll continue doing that. And that's fine. We can look for change. Yeah, tighter consolidations like this, they deter people because they do lack opportunity, and it is coming to an end, I find. And it's like when it comes to an end, it would be hard for it to give less than what it's giving now. So the change, when it does end, a lot more likely to give more what it's giving now. The confines that keep it here, they come to an end. It's a lot easier to find ourselves in a trend not confined by barriers, or it has a little bit more flexibility. But as of now, we're grinding the top of the red zone as much as we did last time, pretty much.
too.
Yep. A new trend of interest. The break. Um, I mean, I think that's what it's working with right now. The smaller triangle is breaking the yellow line like it should. I think we're basically going to be 2 more minutes or so. We're out of it. Like we've seen this triangle before. Yep. Yellow line's the attractive one. Everything it does above it is subject to coming back to it as well. So we have to watch out for a return back to it, just like we did the last triangle. Not something that I think is worthy of trying to take part in the return back to the triangle. It's going to be, but obstructing it from happening could cost money. Any stops that obstruct it from getting back to the POC or any of the triangles from before, see, are caught up in wicks and spikes, so nobody should be dragging their stops in the path of it. In this, waiting for the yellow line to break.
Yeah, just barely made it to the 15-second RSI and the bottom of the green line there, and just pushed up.
Yeah. Yeah, this is the environment where we're going to see it rallying off of that green line a lot more, I think. Like there's a smaller trend as well been formed here, similar to the one that's one is turn it down. Everything's been very even around that POC. We're at the POC right now. This is the point where most of the people have traded. Never been the best price. In the middle more than anything. First yellow line down, allowing for test and fake break a couple times. It's notorious in this area for that kind of movement. It's also the test of the old triangle. There's no doubt about it that that last triangle is tested. And we're next. are breaking everything as it should. Retesting is acceptable. Push everyone out of the way for the end of the day. Yes.
Looks like it keeps trying to bash and bash and bash that line, but positions from the 15-minute RSI on the 1 minute.
On the 1 minute, let's take a look here. Yeah, I see that. I think that I might be interested in using the green line as platform more, even on the 15-second. So curious to see what confluences it has when it is the case that it meets up with any of the green lines on the RSI. I like the idea of putting another spike on top of the red zone ultimately. To work in the high of the node. trying to make it spike.
Go sideways, whatnot, to go up higher, John?
Well, I do think that whatever we get out of the top of the red zone ultimately leads back to the red zone, so it could be a spike. Could be larger though. So we're on top of the red zone. Really, anybody that's exposed to the movement to break the yellow lines and get us up, they could, is profiting. So, under no circumstances is that trade allowed to become a loss. Enough profit must be taken to ensure whatever you choose to hold is safe. And the job's done. Now we wait, see if it pays even more. I'll be right back. Beautiful movement. See that it's continued past the blue line. Everything will come back to the blue line. Well, after all that slow, you can count on the fact that many of the people will not be part of the moves towards the end of the day, and I find it likely that we get a little bit more patterns, a little bit larger ones perhaps, frequent. You can see whose team you're on, and they push through. This is what it takes to be on the moving side. You have to go through the side, the chop. And do you think that the big players have all positioned themselves from the chop? No, they're already in. Chop was so that nobody else could sell up here, so that they don't obstruct the movement beyond the range, because everybody's out at the red zone, because everybody shorted the red zone. And now they're all buyers at the high of day because they get stopped out at a loss. And when you give up your short trade, well, you can only do that by buying. So when they short high and expect to buy lower, they short high and buy higher. And I wonder how many hundreds of people it's happening to right now, and where they get them from, and why people are so susceptible to the information that doesn't protect them against this movement, and they keep eating up whatever it does keep them compelled to trade, just because most people are looking at it. I think that because most people will look at something that thing is relevant, I think the exact opposite. I think the thing that most people look at is the worst thing to look at, and I'm 100% against it. So, completely different. Results speak for themselves, though. And it's like everybody's just like a big, they have a cesspit of huge trading strategies all over the place. Nobody's really doing the same thing, but then they hear the news and they all show up together and act the same way. Just like the farmer and his flock. Very interesting. Today is very similar to yesterday. It's unbelievable though, honestly. Like, against all odds, does it do things that it has never done before in the name of me deciding that they should be done? That's the interesting part. Unbelievable to the average person. Why is it every day that this is the case? Every single day. Interesting to me. I don't even need a full night's sleep. I can't remember last time I got a full night's sleep, to be honest. There was a day in there last week. We're looking at the same kind of spike that we pretty much made here as well. So very curious about that. The same distance that we had off the bottom of the red zone, seemingly placed on the top of the red zone and ready to make some sort of retracement potentially back to the previous support levels. We haven't tested the orange line from above either ever, so same kind of pullback that we made last time, and it came back to test the orange line. Last thing. But no doubt, being exposed to the break of the yellow lines earlier was the best way to position for this move. And having just held from before, you don't have to really do anything, but continue holding to be exposed to it. It's interesting to me that they have that line as well, because I know many people will not have that line. It comes way, way, way back. It's used with absolute precision on a different day. All but wicks and spikes. Look at how precise that is. Continues to get used. Definitely not the work of the public, but it's almost because the public is almost guaranteed not to have it, just like they were guaranteed not to have this blue line and it was used really well. It's like when we can find areas where they're not going to be there. It's interesting. They wouldn't think that though, because they matter so much, right? Oh. Literally, they just line the pockets of Wall Street. That's what they're good for. Because they all start before they've learned. They all just jump in. Because they can't wait to be rich. It's almost like it's not worth working for. That's what I see. At least that's what people seem to, that's the impression I get when I see that they're willing to act on very, very, very basic things, and little on the news. And I mean, like, if this financial news is twisted so much, what do you think the normal news, who's that owned by? Probably the same people. And do you think that out of all the businesses that they have, do you think that some businesses serve a different purpose other than to make money, like the news and media businesses? Or do you think that they run those businesses to try and make money when they make tons of money doing this? I don't think that they're interested in that money at all. They're interested in this money. I think they're interested in this control and their day job, managing short-term fluctuations in the market while their long-term assets grow in perpetuity. Their ownership grows in perpetuity. If they're not doing that, then somebody will outgrow them. Or how not, if not? But the individual looks to give up all they have by the end of the day to escape with a profit before the market takes it back. A luxury the institutions don't have. But every weekend, if they don't go into it hedged, I mean, that's a risk for everything, every bit of work they've ever put into it. But as soon as they have that hedge, you can have another 2008 for all they care. They'll make money on it. essentially everybody that's been shorting in the consolidation again, if their target wasn't simply the orange line, it's been tough, and they're going to go for their stops again. Go for that move. Every stop that's a short stop should be made safe by this point. And that's clear. Now, a lot of people, they wouldn't buy up here. So the institutions are just nudging it a little bit to knock everybody out because a lot of people shorted up here and they're all fear right now. They're all just scared shitless because they didn't understand what was going to happen to them. Helpless. And that's happening right now. Somebody's taking advantage of them and they don't, it's because they don't know. Quite intriguing. Slow burn that leads to fast. It's like a fast shocker. It wants them to really feel it, like the gulp in their throat when their stop right here. This is what's gonna happen. Very, very, very environment. You want to know what's funny? Is they showed this exact same consolidation. Somebody will be like, I've seen this before, and they're gonna look for it to do the same thing that it did, and it will do something different. Just because.
Down a little bit more. I mean, it's coming off of 180 to 200. To that B point at 1304. So.
Yeah, I mean, I know who just brought it up here out of that last consolidation, and I see their footprints all over it. So regardless, I think it's just generally it's a rough place to find an entry in one of these chops. And this is like a standalone node here too. It's like right off on its own. It's like outside of the normal range, and it chose to do this. Everybody's getting stopped out there. Way slow though, because they want to save the fast for the end. You got to be careful with the fast because there's a whole batch of the public that's just waiting to chase. But I think the last move that we had, it had a lot of chasers and they came back and got them and grinded them out. And finally, when there was the least amount of people possible, they got them to chase it here. And look what they did. They knocked them right out. And finally, that was the gyration where they didn't try again. They ran with it. But they would have kept going and going and going until the people stopped. Not like there's a magic wand or something like that. Like they are literally fighting against the people. And they win every day, or there's hell to pay. And if they don't win, then they'll lay people off. They'll do other things to make money. Change of the hour had very minimal impact as well, which is intriguing. The ATR is going to be very, very low. 3.59. That's very, very low. And a new yellow line almost be drawn in there. An interesting yellow line I see. Better chance that we're closer to the next new thing as well. Curious to see what Power Hour has to bring. So this one, it's like it's a fifth wave. So we do have to watch out for that as well. The people that are trading this one, they're like they're getting a fifth wave, which is never really the best spot. But everybody in that consolidation is sweating buckets right now. They're just like, drag your stuff up for an extra $20 loss, you know. That's what they want to do right now. They're trying to get them to inch their stops up so that they can take more of their money. How else could you do it? If you were going to do it in a better way to get most of the people, do you think quickly would be the best? No, no. Not right now. different consolidation perhaps. This one goes quickly at the end when everyone's out of the way to show that they've won. They'll do this. Go a different way, but it will be the appropriate way and you can count on it.
No, I went the 5 minute there, John. I put fibs. B point at 11:20.
Mm-hmm.
And we're only at like the 127 on this move.
Interesting. Yeah, we just made a new high though. Everybody from the consolidation undeniably stopped and then the trend used properly. It's like they are in absolute control and anybody that stands in their way will pay the price and they're going to move things differently from this moment on and we're not going to have seen the next thing that they've done today. It's going to come out of left field and that's the way they should do it to throw the most people off. They're not trying to give control up. They're not trying to give good positions away. They're trying to overlap everything that they've done. They're trying to make it as difficult as possible. They're trying to make it as even as possible in an environment where nobody measures. Too busy with the news. Too busy feeling about the news. I don't even know the news. But I mean, like, no news will ever tell you that amount of precision for how many moves have I said in a row now from the blue line. Since they took control at this blue line, I said it would go down to the blue line and get there. Do you know that this point's never connected to the price? I anticipated that that would be the exact angle. And that is remarkable as far as I'm concerned between me and God. I don't know people in this earth that can do that. I don't know them. Never seen them before. Ever. Intentionally be able to do that. So that's my life's work though. Basically I've done it for longer than I've done anything else. So But those are the things that keep me going. That's not worth any kind of money. Like I say, um, the ability to do it over and over and over again is worth its weight in gold. Like there's no substitute for being able to do it well tomorrow and for the rest of today. And that's the idea. Consistency is intentional, or else it's ultimately going to be given back to the person with consistency. Market seeks those that have the ability to maintain it, and if you don't know why you've got it, well, it's gonna be hard to keep it. That's the way it goes. And even if you did know how you got it originally and the market changes it, if you apply the same kind of technique to the same strategy expecting the same result, the market will prove that is what is it? What is the exact word that he used? He was like, well, if you repeat the same thing over and over again expecting a different result, you are what? Because that's what people are if they actually do that here. If you expect the same thing over and over again, like that's foolish. And the market it's like it's interesting because everybody thinks they're a genius when it comes to it, and then literally it proves them wrong by showing them that this is the law, that we're not going to let your strategy win every time. You have to be comfortable with change. Most people cannot comprehend that, and they get, I'm like, I used to be one of them. When I only knew one thing, that's all I knew. That's all I knew to look for.
One more than I got, buddy. Was watching AMD for most of the day. I think they had a pretty good day.
Oh yeah, take a look.
Yeah, lots of movement for him today.
Yeah, yeah, it's pretty decent.
I like this when you do like the little stair step pattern with it. And you draw the circle with the ducks or whatever you call it.
Mm-hmm.
It looks pretty good on AMD's how I've got it drawn.
Oh yeah, this is the this was my chart on AMD, and if we look back, this was the original. AMD is bullish too.
What I'm talking about actually.
Yeah.
Yeah, I mean, this was a month ago that we talked about it. I feel like, and you're like, oh, this stuff, and here we are.
Mm-hmm. Oh yeah. Yeah, it's this is like it that I mean I couldn't ask for more. Like I wouldn't change a single thing about the analysis. And I'm like, well, everybody can go back and see that this is really popular in retrospect, then they're going to make it part of their strategy. I wouldn't be surprised if, as soon as the market saw that people were obstructing this from happening, it will change. And they won't understand the next thing. So I mean, like, I don't really care. I'm not holding this close to my chest or anything. Yeah, I literally invented it, but I'm like, it's going to, it's going to, it's going to change. And like I'm starting to become very skeptical about it, and I haven't had to see it change in order to feel that way. Like I'm like as everyone else is growing closer to wanting to have it work for them, I don't want it to work at all. I don't want it to work at all. I'm not looking for it at all. I think that we're closer to one of the last few times that we've actually done that, and that things are undeniably going to change soon. As soon as people start to get used to the thing that they've just seen, and I'm like, well, let's see.
Yeah, for AMD, you really had to be in a while ago. It was one of those plays.
Oh yeah, for AMD, but
But now that's, I mean, it did its thing. You missed the boat
Oh, 100%. Like it's closer to dumping hard than to going up. The next play is a short. I wouldn't buy up here with a gun to my head for sure.
No, I think next play is short. You're right. I need to get that in order. What's that orange line you have there on your 8 cap? Yeah, that one.
That's a long-term trend. It goes back like incredibly far. I can keep scrolling. I haven't even looked at its origin. It goes back days and days and days. But
Gee whiz.
yep, off the chart. I honestly don't really mind where it begins from. I haven't checked all day. I've just been using it. I understand its value is really high, but I honestly have no inclination to see where it goes from. I feel like it's an incredibly strong waste of time. I don't want to know.
Yeah, no. I think that information doesn't help. But I was just liking that it comes in off the out of left field and
hmm
is supported throughout the day. I thought that was pretty neat.
Oh yeah, this was the one that we used yesterday at the yesterday's high as well. So it was the one that was used here, and then it came back and grinded it many times, like with absolute precision, hit it multiple
Nice
times.
panel too.
Yeah, and then today it carried on using this. This was the report. It only spiked just through it and came back just to test it. Now we're sitting right on top of it. I do admire that.
Yeah.
Yeah. And it's like when I see that lines like that are used, it shows that the people that are in control survived since that began. Like they didn't get wiped out on Thursday and take a few days off and come back to a naked chart like most individuals do at some point throughout the month every month. And I'm like, well, that's not something that the institutions will ever do. It's always they hold themselves accountable to being able to have most of the information and be able to understand it and to be able to use it to their advantage consistently every single day. Because it's like a matter of if they don't have the ball, then somebody else is going to have it. And they only keep the ball by being better. And I know that. I know that. And that's why I'm so confident in my ability to be able to rival them shortly. But because I see the game as they play it very clearly. And today, I'll make another video as well. I'm trying to make videos on all of it. It's so hard for me though, but I'm gonna do it because it's literally unbelievable every single day, and nobody gets to see it, and it's crazy. Since this point right here, since we like basically talked about the need to get to this blue line and get through it, it's been a matter of a show of force by the people that have absolute control because there's no way that even if it was the public, right, and it was the public's random disarray that amounted to this amount of precision, and I was able to calculate it, how is it that even if the public isn't aware of their next move or doesn't have a solid plan, how could I continuously predict it? But it's more or less somebody's solid plan that has to be predicted. That's the composite man, I guess, the composite man's plan. I can't actually prove that there's any institution that even exists. Could be God that's moving the market for all I know. At the end of the day, the composite man is what Wyckoff came up with, and literally, it's incredible. You know, it- Before computers existed, he believed that the market moves in a way that is to a disadvantage of the individual and to the advantage of those that understand the game as the composite man plays it. And I see that.
John Nash got into with the zero sum game stuff that he was working on.
Yeah.
That he stated is, they need you to lose because every point you don't have, they get to have, and vice versa. So it's in their best interest to take all the shots. In the movie, he talks about hitting on women in a bar, but the theory's still there. Interesting.
Yeah. We're pushing new high a day almost here.
mentioned earlier. 071, 88, 200. That's the high a day, basically.
Yeah, it's a point where you want to start looking for hedges. This is a trend that basically getting hard to hold. Any hedge trades that have been taken on the last minute are profitable on this minute. Curious if the next change of the hour will have a increase in volatility, or an increase in the ATR rather, because the ATR is quite slow. So Well, the ATR is really, really low right now, so you have to consider how much risk you're taking on by shorting it. I think that the play is to continue holding the long, and if you do have a long, then you hedge it. But if you're just shorting it, then you're taking on more risk than anybody that's hedging it, and the ATR is not very good right now. Basically, you have to be comfortable with very minimal move, and anything that it has offered, like the standard move that it's offered right now, has been less than 5 points on average. And when it does move, the standard pullback, 22 points. I mean, like, how much is put at risk for that 22 points? But what is interesting to me is that we're that same 22 points that we've been many times. Well, I guess it's been actually a little bit less than that over here. Yeah, it's been used very much, this trend. Would be an appropriate move to get back to the orange line at some point here. But it would be smaller if we were to do it from here. It wouldn't be the same. It's just shy of a move back to the orange line. Would be a little bit smaller than you. So
I'm just wondering if we get some quick action going up here, and then maybe a major spike or something like that.
yeah,
ATR's 3. It's crawling.
yeah, exactly. And it's because of the anticipation of tomorrow's report. Like, everybody knows that if they make a trade right now, then they're potentially, exposed to the report tomorrow. Oh yeah, yeah, yeah. The indications that I give are, they're not like the same as the last, or like, there's nothing that I really like cling on to and pretty much do every single time. It's, whatever every situation is slightly different, and I like to, apply the correct analysis to whatever that situation is, and sometimes it's like it's a different result. It reminds me of like a language that's it's like a sentence is comprised of smaller words that convey a larger meaning. And I mean, the market is the same way, except it just doesn't have to be so black and white. Sometimes it's trying to explain something a little bit more advanced, and sometimes it has shown us it a minute ago, and because it's that much more advanced, it's that much less likely that people will have found it, and then we can actually repeat that over and over again, and actually be able to use that to the advantage of our advancement and institutions advancement as well. It looks like they're responsible for making these moves and for putting everyone in the position that they're in. I'm like, I do admire the way it's been moving today, and I can see that it's not just one strategy or one size fits all that makes this trend. It's the underlying idea that we understand there's a bigger picture move that we want to be, consistently a part of and in line with, and until we have reason to believe that it's over or the exposure, remains. And I don't think the institutions are looking for a spot to sell. They're looking for a spot to hedge. And why are we not doing that too? That's what I say. Every single day. I don't say here's a spot to sell so that we can start shorting it and start trying to short against the market. But all of this upwards movement is the first focus and the main focus of every single day. And that's been what it has been. And like we'll see on yesterday's video, it's very, very clear. I just put huge letters on the middle of the screen and said, today's high is in danger, and exposure to the upside is the way to go, basically. Similar to today, except today it was remarkable precision with a line that I invented and decided should be the absolute pinnacle of reversal, and the market respected it as the beginning of this move, where the people that orchestrated this move started at the exact same point where I found interest suspiciously particular. How many days in a row will it have to be before we understand that it is the plan of somebody, not my plan? You know, just that's the way that I see it. It's the way that this sentence is meant to be comprehended. The way that these moves are meant to be collectively comprehended in order to be able to get an idea of how we want to position ourselves for whatever target it presents for us. That's the way it is. And the more we understand, the more targets we will see and the more we can be part of.
Well, that's the 261 that I was talking about earlier, but not much going down there.
Yeah, it's definitely like responding in a strange way. That 261. It's intriguing to me that they've managed to respond like this to the 188 200. When the trend breaks, that could be the level that it actually wants to try and get to. And basically, all of these people that got stopped out on these movements here, they'll be able to get that point back again in the future, most likely. And obviously, that can't happen until the trend breaks. But what I'm saying is that is most likely going to be the value of the trend break when it does break. Purpose of it is to come back and essentially taunt the people of the 188 200. And it's like tomorrow we'll see a 188 200 work properly after all these failures. Most likely nobody will touch it with a 10-foot pole. And it'll probably have a bearish divergence on it, it'll work. And it's like people will be so scared of it from today, because they can say as a matter of fact that it didn't work today. And why somebody would just decide that it would work tomorrow? Crazy. But watch. Insane. Market will change and you can count on it. And it's not going to be doing the same thing that it was just doing. And I don't know how people continuously think that it's one strategy or one indicator or one thing, but we will see it change and they will not understand. And I can count on that. The institutions will have a plan that puts the people in the worst position possible. And this is a big event where everyone's going to show up. This is like the presentation of the institutions tomorrow. Everybody will flock together to feed on the information that the Fed has to release. I won't even have that meeting on, and you'll be able to see how we can determine exactly what it's going. Every single move throughout the day, because it does not matter. While they're all feeding on that, I'll be focusing on the reality. And just understand that before that meeting starts, that information exists, and it's possible that somebody else could get a hold of it. Don't be naive. And don't let them have that advantage. Because I already know these gentlemen that are in control today already know what's going to happen tomorrow. Guaranteed. 100%. The 261 has just been returned to as well by a spike. But the only reason why they're able to make these moves is because these are the moves that show that they have control, and if they don't have the control, then somebody else is going to decide what happens. Is that not true though? So isn't it best that they decide? Isn't it best that they keep deciding? And when they have decided before, and they've seen what it's like not to decide, and they come to an environment since somebody else has created for them, don't be surprised if they lose money or have some sort of negative impact. So dropping the ball is not fun for them. And how could it be if it was? You think it's nice coming to the morning on a Monday and like wondering where everything is and like not knowing anything what's happening and checking to see what's going on because you have no idea, just completely oblivious. Now that wouldn't be allowed at the best. Wouldn't be allowed. Be unacceptable to not understand. The facts at least. But the facts of the situation of like where were the moves? What did they mean? And how did they respond for the people that were a part of them, and what were the purpose of every move, and what are the facts around that situation? Where were the containment areas? What were the barriers? What were the things that compelled it to move? The size of the consolidations of the patterns, everything. The size of the nodes, every single thing it's willing to show us. Anything that can change in favor of it being uh, related to a fluctuation in the market. If it can influence a fluctuation in the market and it's not considered, well, it's a risk. And some sort of news article that's already happened or been released in the past, or something from 8:30 in the morning, is very unlikely to continue having the same shock value late in the day that it had at the beginning of the day or when it was first released. Yet people will think that the move that happens from that point on because of that news event, that is the result of that move. Watch tomorrow. All the full internet will be saying, "Oh, the Fed move happened, and it was because of the Fed that this move happened." And
That's
then,
exactly right.
and
That's why you got to watch out for the news because every little incident, that's the reason.
yeah,
Oh yeah,
exactly.
it's not ever one thing.
And you want to know what's crazy is as soon as people think that that's the reason, then they stop looking, and they honestly don't really know the reason. They haven't actually looked.
Then you get in this habit of having to be told, and
Yep,
you should you should just keep your eyes open.
exactly, exactly. Yep, that's the real safety. Exactly. And like the idea is that if the institutions, they have like 400 eyes open, all unanimously working together to benefit the bottom line of everybody's know, pool of money growing, and it's not everybody.
Exactly. That's why I like everybody putting their 2 cents in here because we've got what 16 eyes in here. We need them all. I don't
Yeah,
think there's any one-eyed folks out there.
don't think so, but yeah. I also want to talk about this five-wave move, because it was like 1, 2, 3, 4, 5, or you could say 1, 2, 4, 5, and they're both like, when is the fifth wave supposed to break the trend? It hasn't. And is it not true that returning back to the 200 would be like coming back to the fourth wave, or at least the last wave? And what's interesting is back in our last uptrend, the market was notorious for moving like this and coming back to the fourth right here, and then grinding to be able to repeat the process again. But that's all it came back to many times. And, well, here it is. The trend breaking, getting back to the 200 and the fourth wave is pretty normal. So of course, no stops are to be dragged above the 188 200, or they're subject to getting uh, stopped out. Basically the same amount of profit that it offered the last time, breaking the trend now. Watch for the gap too. When we hit a gap like that and it hasn't retested yet, you can see it's really interested in coming back to the retest in this market environment. And it's like all of that is subject to change as soon as people start to notice that that's what it's doing, and then they're not going to be open to it changing because they recognize that so well that that's their strategy, and they keep repeating it over and over again, just like they'll program their algorithms to look for it or to trade it like they seem to do. And it's all just like cutting corners so that you don't actually have to put work in to be able to earn what you deserve. And I'm interested in the manual tools that take like 3 clicks tops. I'm like, and like what of all of 15 seconds to apply, if that. I mean, like, God forbid we spend the time in the clicks. Oh, geez. Just to have a certainty and an understanding and the ability to remember, to recall, to, personally compute the information so that you can relate your experiences in the past with it. Think about abstract ideas that can otherwise benefit. And on hedges, just a reminder that using half or less is significantly less riskier. Half. We are a few hundred points above 60K. Farthest away we've been in a while, it would seem. The consolidation that we had below this one is the one that many will remember. 16K consolidation, and it seems miles away right now. To be honest. I've noticed an increase in volatility over the past little bit here too. Probably won't reflect much in the ATR, but interesting when we see heavier move. It doesn't translate into the profile. Doesn't actually move very much at all, but it's very, very low. I also find that there is a blue line very likely to get tested. Where's the blue line?
So 188.2 to that B point 1123. The one that I said number earlier was only at the 141 or 127. Yeah.
Beautiful. The rate of change of the candlestick. High. Interestingly, wanting bigger candles coming into the end of the day. We can mark the imbalance.
Interesting, to see tomorrow what the interest rate will do.
Oh yeah.
Don't put it or enhance it. But it should be no surprise. I mean, if they don't change the rates or anything like that, maybe it won't be much of a move.
Yeah. I think it'll be good to get like out of the way regardless.
Oh, for sure. And that won't happen till like 2 o'clock tomorrow afternoon.
That's right.
blue and the gold touching, and it just meets, and then I just love when that happens.
Yeah, I'd like to see a touch from the underside.
That's what I was thinking. Like get a little bounce here, then move over, touch the blue, then test from the bottom.
Hmm. Yeah, the trend still has never really broke. It's only ever like fluttered past it. There's not been any like real break or retest or anything like that, or ignition candle. I'm curious about that.
These two little bumps here remind me of something. Uh,
Oh yeah, yeah. It could be making an M or like the
M or head and shoulders or something.
yeah, like a head and shoulders. Yeah, I see that. Yeah, yeah. It is. It is. It's good to observe though. What I find interesting is how similar it is to the last alignment area that we did here, except it's smaller, but still holding that same angle. Now, of course, the imbalance is the blue vertical line. We're at the support line. like the retest there. Keep in mind the imbalance is coming up, so that is the next thing. Oh, let's see what got going on here. Over the node, the other side of that gap, end of the 180, 261 barriers could be responding to in a moment.
Seems like a good spot for a retest.
Well, it could retest, but it would be a double retest, and that's okay. Sometimes we do that.
Oh, I meant the blue line.
Ah, okay.
I guess it didn't necessarily retest anything on the blue line, but
Mm-hmm. Mine's good to test.
so anybody going long late is going to get squished out here before the imbalance, where I imagine it's going to get a little pop.
I'm thinking down.
Yeah.
It all depends. The imbalance is rough to play on this. I'm short and I'm holding, but there's no way it can become a loss. It's just a hedge trade. So I'm like, as soon as I've managed to take off enough profit to pay for the remaining, then it's good to go. Keep the stop at the extreme, and like one thing that I was thinking of is that it might be the left shoulder to a head and shoulders. That was the biggest risk, that that the initial move was going to be a left shoulder, but not much time left in the day. There's enough to make that pattern, but tight if it does. Basically, the best thing that could happen is it allows for this to hold close, work as a hedge for the tomorrow's meet. That's very unlikely. More likely that at some point it comes back to try and get everybody. So it's good to make sure that you take some off if you do have any hedged or short. There is some struggle with this line though. I do look at it a little bit differently. Not as Oh yeah, I'm interested in knocking out stops at the bottom of the range there. And it's like just before the end of the day, they changed the way that they played the game. Throws people off and keeps them in a disarray. Makes them go back to the drawing board about their strategy, and they will come tomorrow confused. And that's the best way for the hedge funds to be positioned, is if there actually is a very big imbalance with the way that people are positioned. Everyone's kind of thinking the same thing. It's the biggest risk. I don't like that. Basically, the entire high has become levels to test. With 5 minutes till the close. Also, the retest of the broken trend right about.
Resistance around that 180, 200. Maybe it'll have some resistance around the 261 up higher.
Yeah, it's been reversing or having resistance around like 300s lately. And hell of a move. It's the Nasdaq that's mainly feeling this. Like the Dow and the SPY, they're barely catching up. Definitely looking into the yellow line again. Of course, there's barely any time left in the day. The close is here. Basically, closed them. Yeah. The movement carried on into the close. Of course, there's a report tomorrow, as everybody knows, and the it's not even in the morning, so there's plenty of time to get exposure for hedges and stuff and such. But basically, this movement at the end of the day, I'm curious to see what it'll formulate as overnight. Basically, the yellow line I expect to get tested not too long from. But yeah, hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, have a good one. Yeah, take care. Yeah, anytime. Take it easy.